Good morning. Welcome to IG's early morning call. It's the start of a new week, Monday, the 17th of July. Let's take a look at the headlines. This will begin with what's happening on the foreign exchange markets with that US dollar remaining below 100 on the dollar basket. Last week saw the worst weekly drop in 2023. Now, we've got a little bit of a turnaround in the markets in today's session, but it is only a very small retracement in what is otherwise a market where fully expecting to see a continuation of the prospects of a topping out of US interest rates, and it switches the focus very much onto the European Central Bank, the Bank of England, and also the Japanese Central Bank, which is still keen to ease monetary policy or keep it very low. But the dollar is seeing a little bit of a turnaround in today's session in what is, I think, just a small retracement. Chinese GDP out today. It's missed forecast. Very disappointing data actually coming through for the Chinese economy. It is still far higher, far stronger, a far still bigger number than many other economies around the world. But nonetheless, the Chinese are continuing to pump in stimulus, and it's expected that this will continue from the Chinese authorities. It's a big week for earnings this week. We saw things kick off last week with what looked like a good set of figures in the banking sector. We get more banks this week. Ultimately, when all was said and done on Friday, all the good work was undone on the markets for the big banks. We'll have to see how things get underway. Many of these big stocks, including Tesla and Netflix, also out with numbers this week, all trade all sessions on the IG platform. Stock of volatility still crushingly low, despite the fact we saw a little bit of a recovery on Friday, but it was only a very small recovery, and then it ended up as a red candle on the way down as we saw more money going into the equity markets. The market is rising at the moment at 1568, but as I said, it is still crushingly low for us traders. Anything below 20 means it's increasingly difficult to get a bite for a trade on these markets. Look at the FTSE 100. We're expecting a lower start to the trading day, not just here in London, but across the European markets. Second in a row of losses after the drop that we saw in the 24-hour markets on Friday. And it really is just a question of seeing how far this retracement goes. On the German markets, interestingly, the highs that we saw last week, not quite as high as the highs we saw at the beginning of the month, which means we've got the third time in a row, we've got a slightly lower high, which technically means because we had this lower low here, possibly this could be a cresting of the markets. But look, we've said this before. We've got a cresting there going into the beginning of March and beginning of April, we saw a rebound. So it is only just, again, a retracement in what is otherwise a market, which is longer term, still showing gains. French CAC 40, same sort of price action, capped out with this falling line of resistance in the last couple of days. We're going to continue to monitor that as things progress this week when we see these earnings produced. Overnight in Asia, no trade today in the Japanese markets or indeed in Hong Kong as well. So I thought perhaps we put in the Indian Nifty 50, up 0.25% in today's session, but losses in Singapore, losses in the Australian markets by a margin of 1/7 to 1%. Some of these base metals down on concerns about the lack of Chinese growth. Quick look at what's happening. Lack, I should say, in relative terms, of course. Quick look at what's happening on the US markets as of the close on Friday. We saw a drop for the NASDAQ by a margin of almost 1/5 of 1%. It wasn't a big loss when you consider the longer term picture. But again, for the Dow Jones Industrial Average, and in fact, if you look at the Dow, you can see in the last, Wednesday last week, and then again on Friday, a new higher high. It was only a very, very small higher high. But nonetheless, taking us back up to levels they're not seen since the 1st of December. So a new high was created for the year intraday on the Dow. And it was a relatively, as we've just seen, the Dow was one of the few markets where we saw gains on Friday. And in fact, we have seen this market open today with a little bit of a loss, but really honestly, we're waiting to see what happens this week in terms of earnings. Some tech companies reporting earnings this week, so we'll be monitoring what's going on with the NASDAQ. On Friday, we saw a new higher high, not seen since the 17th of January 2022, intraday on the NASDAQ. And then came the pullback that we've got this market on. There's a green candle there today opening up. As I said, it's really all about what's happening with earnings. There are no earnings out today in the US particularly, but we get into Goldman Sachs, we get into Bank of America out tomorrow, and then Tesla and Netflix, which will be of critical importance, I think, for the NASDAQ. It's the like of Tesla, Apple, Microsoft, which has been leading up the rise that we've seen recently. And in fact, there's been a story as well coming through for what's going on for Microsoft as well, one of the stocks worth watching. I'll get onto that in just a minute. I want to switch the focus now onto what's happening with this dollar. This is the dollar basket chart. As of Friday's low point, we saw a new low, or not seen since the 5th of April 2022, and then we saw a rebound. As I said, it is only a small retracement, but look at this. We've got a red candle again there today. How do you trade this? Looking at euro dollar. Interesting enough, the move that we've seen on the euro dollar is not as severe as it's been, or I should say that retracement as it's been for the dollar basket. Now, the euro dollar is about 60–70% of the dollar basket. So you can see in that case, it was other areas of that basket which has really moved. Looking at what's going on here at the moment, we're still continuing to trade very close to highs, 122.27. And if you're long on this, I wouldn't stop the long trade. I wouldn't necessarily look at this. There is a new high coming up. But that's all the way back up at these highs not seen since Feb 2022, which is 114.95. If you are long on this market, you continue to bring the stop loss up, continuing to lock your profits in. 114.95 is now the price target for this trade. Wanted to update you as well on what's happening in other areas of the market. You can see I was talking there about some of the other areas where we've seen more dollar progress, and against sterling is one of them, where we've seen 2 days in a row now of losses for sterling at 130.70. This is only a small retracement, as I said, on what is otherwise a move up for sterling against the US dollar. Today's session, we've got the dollar down against the Japanese yen. It's only by a small move, but this move down has been a bit of relief for the Japanese authorities, which were concerned about the weakness in that Japanese yen. Just want to refer back to what's happening with sterling in the context of house prices. We've seen a Rightmove survey out this morning showing us that there has been a drawback in the markets in the month of July, and this is pretty much as expected. They're down by a margin of 0.2% last month. Tim Bannister, he's the director of property science at Rightmove, said stubborn inflation and further mortgage rate increases contributed to the fall in prices and a number of agreed sales. And I think this is really all about the messaging we're getting through from not just these indices, which is reflecting what we got at Rightmove between that, the Halifax, and also the marketing numbers out recently on the house price index from the Nationwide. But also we've got that news now coming through from the house builders. Last week it was Barratt Development saying they confirmed that it was a 3.5% drawdown year on year. This Rightmove survey also showed buyer demand remaining resilient this month, up 3% compared to pre-COVID levels of 2019. Of course, we've got to bear in mind all this. The backdrop to this is the central bank, the Bank of England, continues to increase interest rates. Went to a 5% base lending rate in the month of June. That was up 50 basis points, pushing the cost of mortgage borrowing up. The average 2-year fixed mortgage rate now reaching a 15-year high just last week, over 6%. And that is a major concern to those that have mortgages which are due to be renewed sometime later on this year, because it's unlikely we'll see a drawback in those mortgage rates because the Bank of England still expects to raise interest rates. So this Rightmove number is in the context of what we got in terms of sterling, as I was just showing you there, sterling against the US dollar. It continues in the longer term to rise because the Bank of England is continuing to raise interest rates because inflation continues to creep up. Let's take a look in some more detail now at what's been happening in China. One of the headlines we've been covering this morning. In the Chinese economy, GDP expanded 6.3%. Now, if you've got 6.3% in pretty much any other economy around the world, you'd be celebrating the fact. This is after a 4.5% acceleration in the first 3 months of the year. But the rate was below the forecast growth of 7.3%. Nonetheless, this is the quickest pace of growth since the second quarter of 2021. But the reading's heavily skewed by economic pains caused by the COVID-19 lockdown last year. The Chinese January to June GDP growing 5.5% year on year. That estimate had been 6.1%. So again, pretty impressive by comparative standards against other economies. But so far as China is concerned, it's really not doing the work that many had been expecting it to do. Also released this morning, you can see on this chart here, industrial production rising 4.4% in June year on year. Expectations have been for 2.7%. Retail sales rising by 3.1% in June. That had been a 3.2% figure. Just a quick update on what's happening with the Chinese yuan. I won't necessarily say this is anything to do directly with this, but the Chinese yuan weakening in today's session. This is the dollar rising against the yuan for a second day in a row. And I think one of the other things that's worth looking at is the effects it has on other economies around the world, most notably those that work very closely economically with China. And the Australian economy is one of those. The Aussie dollar down heavily for a 6th day in a row. This is against the US dollar. Now let's take take a look at some of the corporate news headlines. I want to bring up a chart of Casino. This is the French supermarket company. You can see the direction of travel is very much on the way down. The Czech billionaire Daniel Krasinski is poised to win the battle for control of Casino after a group of investors led by the billionaire Xavier Niel dropped out of the running to bail out the heavily indebted French food retailer. Now, this has been piled in with debt, this company. Casino, which is the sixth biggest food retailer in France, it has 53,000 employees. It's a massive employer in the country. It's been controlled for decades by Jean-Charles Naouri, who built up his stake in the business, but he's saddled it with 6.4 billion euros worth of debt that rating agencies doubt that it can repay. Clearly, Daniel Krasinski is looking as though he's able to do this, or certainly thinks he can. This stock, let me just quickly show you at the beginning of this chart, back in January 2018 was worth 53.35 euros. It's now worth 3.16 euros. As I said, enormous amounts of debt on the balance sheet. Is this going to be a new period for Casino? Now, Microsoft's planned $69 billion purchase of Activision Blizzard has taken a lot of the headlines recently in M&A. It's back on to sign the biggest deal of its kind in gaming history. That is, it's on in the States, not on over here at the moment. In the UK, the Competition Markets Authority has its own doubts. So I want to show you the chart for Microsoft. First of all, it trades all sessions on the IG platform, due to open in a short while, 9 o'clock this morning UK time here. It will open at $344.98. And indeed, on Friday, this stock managed to create a new intraday record high. The Federal Trade Commission and the Competition Markets Authority in the UK had both tried to block the deal because the combined company would just be too dominant. And this would continue to fuel the size of Microsoft. Now, on Friday, a US judge rejected the final calls to block Microsoft from taking over Activision Blizzard. But in the UK, the CMA, the Competition Markets Authority, is wanting time to reconsider the proposals from Microsoft to restructure its cloud gaming business. Now, on the other side of this, it does have an effect potentially as well on Activision Blizzard. And you can see here, this company has seen some enormous gains recently. When that first deal was first mooted, going back to March this year, you can see the big gap up that it had. Then the question marks started to come through, the FTC and the CMA, both really asking some serious questions about this. But since then, it's all back in. Now, back in April, the CMA said the combining of maker Xbox consoles with the creator of hit games, including Call of Duty and Diablo, would give it the ability to undermine new and innovative competitors. Now, the CMA has now pushed back its 18th of July deadline for it to block the deal until the 29th of August, after receiving a detailed and complex submission from Microsoft. Interesting to see where these two stocks open on this Monday. Now, after last Friday, which saw three big banking stocks come to the market with their earnings, JPMorgan Chase, Wells Fargo and Citigroup, all beating on the top line earnings and revenue estimates, we've got some other companies coming through this week. But before I get into the numbers that were expected, I just want to quickly revisit what happened with a couple of these stocks. This is JPMorgan Chase on Friday. That stock was up considerably. As of the high point on Friday, we saw it rise all the way to $154.43, the highest we'd seen it at since the 17th of February. Then came a really big pullback, and the stock was actually down on the extended trade, down 0.1% at the close because of concerns about the outlook. The outlook was detailed quite nicely by Citigroup. Citigroup did actually pierce through this falling line of resistance at one point, but then came the drop down over 4% as at the close. Concerns about rising costs, concerns about the fact that it's just not trading anymore. We've seen volatility drop, which is really hitting all these trading houses. And also M&A is down heavily. Now, tomorrow, we get the Bank of America earnings expectations, 84 cents on revenues of $20.02 billion. And on Wednesday, Goldman Sachs expected to post earnings of $3.46 per share on revenues of $10.66 billion. I want to show you the Goldman Sachs chart because this is going to be one of the ones I think that could well be worth watching. Goldman Sachs is an all-session stock on the IG platform. And we've seen it gain recently, but it's one of the highs from a few months ago. According to Semaphore, citing people familiar, these earnings from Goldman will be its worst quarterly earnings in years. with write-downs on Goldman's Green Sky consumer lending business and on holdings of commercial real estate are likely to exceed $2 billion, according to Semaphore, sending the return on equity into the low single digits. So Goldman Sachs could be one of the ones to watch, potentially on the downside, if that does continue to concern investors. Take a look at some other earnings due this week. It's not just banks. We move into the tech sector as well. Starting on Wednesday, we start with Tesla. After the closing bell on Wednesday, the street expects earnings of 79 cents a share on revenues of $24.29 billion. In the same quarter this time last year, the electric car maker posted earnings per share of almost 76 cents and revenues of just under 17 billion. So you can see there's progress being made. This illustrates very well the shift in strategy that Elon Musk has put in place at the beginning of the year to be able to compete with cheaper Chinese electric vehicle makers. Musk said Tesla needed to prioritize sales over profits. Also expected on Wednesday, Netflix, Halliburton, IBM, following on Thursday by American Airlines and Johnson & Johnson, and on Friday, American Express and Schlumberger. All these stocks are all sessions on the IG platform. Now let's shift the move on to what's happening elsewhere in the world. And there had been a case, I guess, to look at oil in terms of the market performance in the context of what we saw from China today. I want to show you this chart of Brent down heavily on Friday. And again, you can see here a snap lower. I've got this line at 78.52 on here as the line of support because it was the high we had back on the 24th of May. And you can see we sort of touch this quite often in the price of oil. So it is an interesting area. It's around about the period, the 100 period moving average at 78.10, so a little bit below where we are. But at the moment, at least, it is just a small retracement on where we have been, putting a Fibonacci from that low point there to there. You can see that we've got support at 75.55. So if you're short on this, your stop goes above the, probably a little bit too far away, that candle up there. Your stop would go above the $80 level at 78.65, which is where we're trading. Your price target is 75.55, which is a 61.8% retracement. Now, the Baker Hughes rig count out on Friday showed US energy firms cutting the number of oil and gas rigs, natural gas rigs operating for the 10th time in 11 weeks. Total rig count falling by 5 to 675, puts the total rig count down 81 or 11% below this time last year. Oil rigs falling 3 to 537 last week, their lowest since April 2022, while gas rigs fell 2 to 133. Let's return to the charts and just take in what's going on with these metals. Gold, not too far away from recent highs at 1953. I think copper is the interesting one, which is benchmark I use for base metals, down heavily for a second day. In fact, you can see there are no buyers at 85.45. We're absolutely at the bottom of the candle at the moment, indicating perhaps maybe part of this concern about the Chinese direction of Chinese growth and the fact that if China doesn't grow as much as expected, you can't really see copper snapping out of its recent band that we've been in. That's it. We're back at 10:30 with Charting the Markets. 9 o'clock this morning. Do watch out for Microsoft's reaction to the news out over the weekend and late on Friday from the FTC and the CMA. I think it's of interest to note that this deal looks like it's now back on with Microsoft buying Activision Blizzard in that $60-odd billion deal. Just a question now of waiting to see what the CMA does later on in August, but the expectations are that once it considers what Microsoft has done to try and appease these regulators, that deal could well be on and will seal the biggest deal in gaming history. That's 9 o'clock this morning for the first trade in Microsoft.